Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Monday, the 25th of March in London. I'm Caroline Hepker. Coming up today, as the death toll from the Moscow concert hall attack continues to rise, Putin makes spurious claims of Ukrainian involvement. Once bitten, twice not so shy. Global bond traders once again load up on rate cut wagers. And deadline day for Donald Trump. The presidential contender faces having his assets seized unless he posts a court bond worth more than $500 million. Let's start with a roundup of our top stories. Russia has charged 4 men in connection with the Moscow concert hall terrorist attack, in which at least 137 people were killed. The men had a number of viable injuries and one needed treatment during the hearing. The court ordered that all 4 be detained until a trial in May. Islamic State has taken responsibility for the attack and posted footage of the assault. But Vladimir Putin and other officials have made vague claims of Ukrainian involvement. That is something that Volodymyr Zelensky has strenuously denied.
It's obvious that both Putin and others are trying to shift responsibility on someone else. They've already been blowing up houses, shootings and explosions, and they always blame others.
The Ukrainian president's comments, spoken there by a translator, come amid concerns that Putin could use the attack to justify a new mass mobilization of troops for the ongoing invasion of the country. On Friday, Russia unleashed the biggest missile and drone assault on Ukraine so far this year. French authorities have raised their security alert level to the maximum following the deadly attack on Friday in Moscow. The Prime Minister, Gabriel Attal, said that the increased countrywide awareness level was justified given the, quote, Islamic State's claim that it was responsible for the attack and the threats weighing on our country. Attal made the announcement in a tweet on Sunday evening following a Defence and Security Council meeting organised by President Emmanuel Macron at the Elysee Palace. Meanwhile, in markets, bond traders are once again betting that the Fed, ECB and Bank of England are close to cutting rates. After entering the year banking on March, rates traders are now leaning towards June as the start of the easing cycle. But after previous bets that central banks would be swift to loosen monetary policy backfired, consensus is now building that this time things are different. Matthew Dixon is the head of fixed income strategy at Bank of America. He says that we still haven't seen the full effects of rate hikes.
It takes 12 to 24 months for rate hikes to actually impact the economy. So if you're looking at a lagging economic indicator like inflation and the rate lag, come back and talk to me first half of 2025 to the back half of 2025 and tell me if rate hikes haven't worked. So they've gotten the soft/no landing. They're going to continue to play for that. With 170 million people in the labor force, every 1% increase in employment puts about 2 million people out of work. It's worth playing for.
Matthew Didchok making the case for rate cuts to come there. The prospect of lower rates is particularly boosting the allure of shorter dated obligations, which stand to gain the most as rate cut speculation continues to build. Now, the UK Chancellor Jeremy Hunt has pledged to maintain Britain's triple lock state pension if his party wins the next election. The commitment means that the state benefit would continue to rise by the highest of either inflation, average earnings or 2.5% annually. Now, he told the BBC's Laura Koonsberg that he is confident that the government can grow the economy enough to pay for this.
That is an expensive commitment.
It's a very expensive
and you
commitment.
And you can only make that commitment if you're confident that you're going to deliver the economic growth that's going to pay for it. And what we saw in the budget was, because we have a plan for growth, the OBR say that we will get back to 2%-ish growth over the next few years. And that means that we can start to make that very important commitment.
So that was the Chancellor Jeremy Hunt. And now his comments come as the Labour Party also reaffirmed its commitment to the triple lock. The Institute for Fiscal Studies, though, has calculated that the state pension cost the government £11 billion a year more than had it risen in line with either inflation or earnings since 2010. Now to Ireland, where the Education Minister Simon Harris has been named leader of his party, Fine Gael, making him Prime Minister-elect. The move comes after previous leader and Premier Leo Varadkar announced his intention to resign last week. Now, Harris stood uncontested for the leader spot and used his first speech to emphasise a commitment to cooperation in Ireland and beyond.
We will always be a party that will work with everybody across this island of Ireland to embed peace and prosperity and to make sure we harness the untapped potential of the all-island economy. We will always support democracy and freedom, and we condemn unreservedly the horrific illegal invasion of Ukraine by Putin, and we stand by Ukraine always.
That was the Fine Gael leader, Simon Harris, speaking there. It's expected that Harris will be formally voted in as Taoiseach, the Prime Minister in Ireland, on the 9th of April, when Parliament returns after its Easter break. Today's deadline will see Donald Trump either have to post a bond to cover a $454 million civil fraud verdict or risk the seizure of some of his assets. The former president says he has almost $500 million in cash, but would need closer to $1 billion in reserves to cover the amount and also retain enough cash to run his real estate company. The deadline coincides with Trump's appearance in a Manhattan court for a hearing related to accusations that he falsified business records before the 2016 election. And those are today's top stories for you. Now let's talk a little bit more about Russia holding a national day of mourning on Sunday after the terrorist attack that killed at least 137 people in Moscow. 4 men have now been charged with terrorism. Joining me this morning is Tony Halpin. Tony, good morning. You lead our economics and government coverage in Russia and the wider region. Still a lot of unknowns. It does seem that the evidence points towards the attack being carried out by Islamic State.
Yes, good morning. Certainly Islamic State have claimed it. They've published videos showing what they say are the 4 men who were carrying out the attack. Putin, as you mentioned, though, continues to point toward Ukraine. Even though they are unable to provide any evidence showing that. They allege that the 4 attackers who were detained were on their way to Ukraine. Russia itself, of course, is deeply in shock, and people are really reflecting that it harks back to a period in the early 2000s when terrorist attacks were frequent and caused real alarm in Russia.
The narrative from the Kremlin, though, Tony, is that the attack came from Ukraine.
Yes, and there are probably 2 reasons for that. I mean, the first is in any normal country, a massacre of this size would immediately raise questions about the competence of the security services, and there'd be political demands for heads to roll in the leadership. But nothing of that sort is happening in Russia because Putin, even though he dismissed warnings of a terrorist attack just a few days before it actually took place, doesn't, of course, want to hold the FSB accountable for these failures. And it serves the Russian state's purpose to try and blame things on Ukraine because they're desperately trying to maintain support for the war. And that's raising questions about what they might be planning next. In
terms of the motivation behind the attack, then, I mean, US intelligence had warned about this, right?
Yes, they gave quite a specific warning the 7th of March, saying that there was a risk of terrorist attacks on large-scale gatherings, including concerts. And Putin on Tuesday met with top Federal Security Service officials and publicly dismissed that warning as some sort of American propaganda designed to frighten and divide Russian society. So that's pretty embarrassing for the Russian leader. Islamic State, of course, has targeted Russia in the past, and particularly since Russia went into Syria in 2015 in support of Bashar al-Assad's forces in that country's civil war. So it is not a surprise that Islamic State has claimed it, but we still don't know if they're actually fully responsible yet.
Meanwhile, Sunday also saw the 3rd major Russian attack against Ukraine in 4 days. So what actually about the course of Russia's war in Ukraine?
Yeah, since President Putin was re-elected last Sunday, Russia has definitely stepped up air attacks on Ukraine, targeting energy infrastructure in particular. On Sunday, in fact, a Russian missile briefly crossed into Poland, and that caused Polish authorities to protest to Russia and to notify NATO allies. Ukraine has been striking back as well. It struck 2 Russian ships off Crimea on Sunday. So there's a general intensification of missile attacks, even as there's not much change on the ground in the war.
Tony, also just lastly, what is the mood then in Russia and in Moscow?
Well, people are in shock. This is the biggest attack and loss of life in Moscow since 2002. Many people have grown up believing that this sort of terrorist attack was part of their past, and now suddenly it's returned to their present, and it's created a great deal of insecurity and distress. The city is in mourning and the country is in mourning, and people are really trying to process what's happened.
Tony Halpin, thank you so much for being with us this morning then. Tony Halpin leads our economics and government coverage of Russia and the wider region. Now, as we heard last week, the Federal Reserve and key global peers finally appear set to begin reducing interest rates as soon as June. So let's move on to talk about bond traders who have started to cautiously begin reloading wagers that actually burnt them only a few weeks ago. So have they got it right this time around? Joining us now to discuss is Bloomberg's FX strategist Dave Finnerty. Dave, good morning. This really stood out to me in the piece. Jim Reed, Deutsche Bank's global head of economic research, reckons that markets have pivoted towards dovish policy 7 times in this cycle, and on at least 6 previous occasions, the outcomes have actually been hawkish. So it's not been a very good record.
Yes, it's certainly a very tough trade indeed. I mean, the markets have been looking, or expecting or hoping, however you want to view it, for the Federal Reserve and other central banks to cut rates as inflation is seen to be slowing. And obviously, when you think back to last year, there was obviously worries of a recession, which hasn't materialized yet, but there was expectations of that. And based on that, markets were going, okay, Fed, other central banks, you will be cutting rates. Now, as we know, that didn't turn out the case. And what actually has happened is inflation's proven stickier than they've expected, and the economy has actually been growing more than expected. As a result of that, yields have stayed high and pushed higher than expected. So every time there's been a dip in yields, because the market's very forward-looking, so it's quite happy to run with this idea, as soon as there's a dip in yields, it goes down, 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 then reality, shall we say, sets in, and the Treasury yields push back up. So they keep losing on these bets that yields will go lower. This time, though, particularly with someone like the Swiss National Bank last week, which cut rates, they're thinking maybe this is finally the time they're right. Obviously, we'll have to see how the data comes out, because there is a worry. If the data does come out, continue to be elevated and show strong growth, sticky inflation, then the question is, how much do central banks actually need to cut rates?
Well, what prompted traders to jump the gun a few weeks ago then?
Again, it's all expectations of what you think is going to happen. Any weak data, particularly if it's inflation data or weak growth data, that will get the market excited, going, okay, this is the start of something, a trend that is going to happen. And unfortunately, what's happened is the expectations you've made going into this year, they literally thought there would be a 77% chance in mid-January of the Federal Reserve cutting rates in March. Now, we know obviously that didn't happen. And the reason being is obviously that inflation data, whether it be the CPI measure or the Federal Reserve's preferred measure of core personal consumption expenditure index, they actually remained elevated and actually upticked, which is what the market did not want. And therefore, market to dial back expectations for rate cuts, and that's where US yields go. So again, the idea of US yields pushing lower got beaten up one more time.
Yeah, absolutely. So then where do you think the major action in the market is right now?
I think in terms of yields, the main, if you look at FX, it's very sort of sideways based. If you look at implied volatility, very low. So really the markets aren't looking too much at the FX side of the equation. Obviously, we want to see what Bank of Japan does. Does it intervene in the markets to prop up the yen? If so, you may see some volatility there. But the market really still looking towards the rates as the more active trade, we say, that will give them the bigger bang for the buck. Of course, the catch is they've been burnt so many times. I think the US core PCE data, which again is the Federal Reserve's preferred measure of inflation, that comes out again this week, the monthly data does. If that stays elevated, then it raises the question yet again, well, the Fed signaled 3 rate cuts in its dot plot. Should it actually be 2, which is not good for the trade that yields will go lower. Having said that, if that data comes in weak, then that will empower the bond bulls to say, yes, finally, inflation is under control. The path has been broken, and you're more like seeing them front run them. So you will see treasuries more like being bid very, very quickly into this idea that finally yields are heading lower.
Yeah, I mean, it's a bit tricky, isn't it? Because that core PCE number, the Personal Consumption Expenditures Index, which is seen as rising by 0.3%, that data comes out on Friday. You've also got the Eurozone and the Japanese inflation data, and it comes out again on what is a holiday in a lot of countries on Good Friday, and then you've got Easter Monday, where a lot of markets are also closed. So do you think that could be tricky in terms of market timing?
Yes, definitely. I mean, it's just ironic the way it turned out, because you're going to have thin liquidity on those days. So because of the holidays, and a lot of traders will be off, a lot of markets will be closed. So thin liquidity will more likely exacerbate the move in whichever direction it goes. As you said, the inflation data is supposed to come out quite high, and it's quite solid, shall we say, at 0.3% month over month, which is not really consistent with the Fed's target of 2%, and the year over year at 2.8 again. Very, very sticky because it was that before. So this idea is, particularly if traders have started to load up one way and they have to get out of the trade in thin liquidity positions, that's definitely not ideal. And you can see an exacerbated move.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.